Hello, everyone. I'm Blaise, CEO and co-founder of Nicktail, and I'm here to discuss about decentralized finance and yield farming trends. Maybe at first, a little bit of context about me. So at Nicktail, we develop blockchain analytics and business intelligence services around crypto asset and decentralized application. So our aim is to better understand the investment and usage behaviors around this specific asset class and this new kind of application, and also to better understand the fundamental value of this specific asset. So we have like an observator position to analyze and monitor the development of the blockchain industry. And that's also why we want to speak about decentralized finance today, as it's one of the most hot topic this year around the blockchain industry. So what's decentralized finance? It's basically applications that are providing alternative means to deliver digital financial services. It's one of the latest innovations that has emerged from decentralized economy. It basically follows the idea of rebuilding the infrastructure of financial services and moving it into decentralized networks to take the industry from a centralized system full of monopolies toward a trustworthy and transparent world that runs with no intermediaries. DeFi applications do not need intermediaries or arbitrators. The code specifies the resolution of every possible dispute, and the users always maintain control over their funds. It reduces the cost associated with providing and using this product and allows for a more frictionless financial system. Monetary banking services are an obvious use case for them. It can include insurance of stablecoin, of mortgage, of insurance policy, etc. And all this application has been built primarily on the Ethereum network. It represents currently one of the main application types for cryptocurrencies, which bring non-custodial financial services to the mass market by leveraging Ethereum interoperability and smart contract capabilities. So these innovative tools aim at transforming the financial system in a more decentralized, innovative, interoperable, borderless, and transparent way. Currently, there is almost 10 billion of value locked in decentralized finance products. At the beginning of the year, it was just slightly above 500 million. So this year has seen like a huge growth around decentralized financial services. And we are observing decentralized exchange, lending and borrowing platform, insurance services. So it's really a flourishing and growing parallel financial system that is setting new standards for access, resilience, and transparency. So let's take the time to analyze a few major case studies around this space just to better understand what type of product we can find there. Let's begin by Maker. MakerDAO is by far one of the most recognized decentralized finance applications in the market. It's a credit platform that supports DAI, a stablecoin, whose value is pegged to the dollar, and it's one of the most used stablecoins in the cryptocurrency industry. But it's not working in the same way that other traditional stablecoin providers. In the case of MakerDAO, it allows anyone to open a vault, to lock in crypto collateral on this vault, and then generate a stablecoin against that collateral. So there is no dollars in a bank account to maintain the peg on the stablecoin, but instead of this, it's using smart contracts and collateral in the form of other cryptocurrency to maintain the peg. And all the governance and the system use automation, use smart contract to perform the lending and the stabilization function without a central identity. At the end, it's like a fully automated smart contract services that enable anyone to generate a stable coin and to create a debt on a specific collateral to emit this stablecoin. So stablecoin are like the on-ramp, the easy on-ramp to access other DeFi product, other DeFi services. So this type of project is really needed in the ecosystem to avoid having to deal with the volatility and the fluctuation of crypto asset volatility. So once you have access to a stablecoin, maybe you would like to exchange it for other tokens, for other crypto assets. That's where you might need to use a centralized exchange platform like Uniswap, Kyber Network, or OX, just to mention a few. In the case of Uniswap, it's a decentralized exchange platform that enables users to convert any tokens on-chain in a private, secure, and non-custodial manner via an easy-to-use user interface. So instead of user order book, like in traditional exchange platform, Uniswap make use of what they call liquidity pools that help to boost the protocol exchange liquidity. So it really acts as a fully decentralized exchange, and it offers different services than other exchange platform by using these liquidity pools and by incentivizing investors to bring liquidity to the protocol and then to provide a free user experience for traders and investors that want to perform a transaction. And all transactions are written within the blockchain ledger, and on this case, on the Ethereum platform. So now you are able to emit a stablecoin, to exchange your stablecoin for other token. Maybe you would like to pay and to use your crypto assets like in the real life. That's where payment services come. Most popular are applications like crypto.com or Monolith. So it's basically decentralized banking platform built on Ethereum, where you can spend your token in the real world with a Visa debit card. But instead of a neobank like Revolut, you won't have a bank account. You will always only deal with token address, with wallets, where you can exchange your token using decentralized exchange. So there is a direct bridge between payment services and decentralized exchange. And you can also access, thanks to these services, to other applications in the DeFi space. Specifically, if you would like to generate some yield on top of your asset, you would like maybe to interact with peer-to-peer lending protocols. So this new type of protocols have emerged all along this year. It's really the type of protocol that can generate highly interesting and significant yield for now on the DeFi ecosystem. So in the case of Aave, it's a product that have been launched at the beginning of this year. It's a decentralized non-custodial money market maker, which enable lending and borrowing in a peer-to-peer ways between users. So anyone can lend its asset for an annual percentage yield and also use them as a collateral to take a loan in stablecoin or other crypto assets. So a lot of investors and traders are using this product as it enables either to leverage your position on a given asset or to short the market, believing it will decrease in terms of value. So it's like a specific type of product which has become a key building block of the whole decentralized finance industry. Then if you begin to use these services, maybe you could be afraid about the associated risk because you are dealing with smart contracts. Sometimes there is hack or exploit that can make you lose your funds. And then you would like to get an insurance policy around your activity on the DeFi space. That's where projects like Nexus Mutual come. So it's basically a community-owned insurance platforms where members pool and share insurance risk. So basically, you can get a smart contract insurance that will cover your usage of specific DeFi product and services. And you can basically cover any type of product or services which is verified on Etherscan. It's a community-owned tools that just label different type of transaction platform and smart contract. So through all these different tools, you see that at the end, you are able to generate a stablecoin, to trade in a peer-to-peer way, to access payment services, lend or borrow some money, and also get some insurance services around all these type of products. So it's really important to understand that all these typical financial products that were existing on the traditional market are now available on decentralized network, and it's only the beginning of the development of these two industries. So really, the DeFi space represents an entirely new financial infrastructure stack with financial primitives, automatic market maker, priceless synthetic asset, reflexive bonds, etc. In DeFi, there is really a unique competitive advantage which lies in the combinatorial innovation capacity to enable the development of new products and services in a fully organic and unexpected ways. So basically, new products, new services are interacting with all existing tools within the space, and they are always trying to create more value for everyone, for the user, for the other product, just making great synergy within the overall base. And this financial technology can become the building block for future innovation, promoting a new combination and new products. And if successful, this decentralized business model have really the potential to reshape the fintech industry and to create a new landscape for entrepreneurship and innovation. We also have been talking about stablecoin, and these assets are really important for the DeFi space. In the last few months and the last few years, they are rising in popularity with some experiment from Facebook and Libra, like private stablecoin, or also from central bank, which are all thinking about emitting central bank digital currencies. So all this initiative will bring a mainstream adoption around stablecoin. And then as stablecoin are an on-ramp from DeFi space, it could bring to user a broader variety of services and providers. For now, there is still some problems, some issues, because it's not regulated enough. So if you want to comply with KYC and anti-money laundering procedures, you will need to deal with a custody wallet providers. For now, in the DeFi space, there is not that much of this type of wallets, and the lack of regulation could create some concern for those who want to invest large amounts into the market. However, this lack of regulation, it's also a sign of the early stage of maturity of this space. So we are still in the initial stage of development, and there are plenty of opportunities for higher revenue and better product or services that could be built within this ecosystem. So now we could understand quite well what DeFi means and what type of product there is in this space. Let's focus on the specific trend that has emerged in the last few months, which is called yield farming, and which is basically a new way of bootstrapping DeFi projects. So the concept of yield farming has been introduced as a developing mechanism to distribute rewards to early adopters of new decentralized initiatives. It's basically a token compensation mechanism to encourage users to adopt a new product and to give them a share in governance or future revenue in exchange of the usage of the product. So the best example of this mechanism has been seen around decentralized exchange platforms, which were struggling to bootstrap liquidity. In the absence of market makers, as in traditional markets, these decentralized trading platforms were in the need to incentivize investors to bring liquidity to their platform as a preliminary step to provide a fluid trading experience to users. Liquidity mining has been conceived as a way to onboard liquidity providers around decentralized exchange platforms, and it's basically rewarding them with a project native tokens. So in this way, these liquidity providers earn an additional reward for their participation in an emerging community, and it's incentivizing them to become long-term support, as their yearly rewards in the native token could provide them with a higher return on investment if the platform becomes successful. Then yield farming, that's why yield farming has become one of the most popular mechanisms to bootstrap a user community around DeFi solutions. So it allows early adopters to receive an interest for interacting with the product, and it really creates seniorage of new governance token that are given to the community member who contribute to the product. So the result is an instant community cohesion and vitality in a way that was impossible to achieve before. So this yield farming mechanism, at the end, it shares some similar premise that the one behind ICO, basically the trend that we discovered in 2017, and where the emission of token has really begun. So the objective of ICO at this time was to get ownership into the hand of many and have the many become incentivized to be stewards and custodians of the product. It's almost the same objective for yield farming, but at the end, it's a significant upgrade from the ICO model for different reasons. At first, it does not put capital at risk because this bootstrap mechanism can be set up without any initial investment. So you get a share in the protocol just for being a user, and then you become an investor without having to invest a given asset in this product. In this way, it's also more difficult for VC and wealthy investors to capture a significant portion of the supply. So it creates a really more effective way to distribute wealth around a given community. And as the labor involved with farming creates long-term adherence and cooperation with the social contract of the product, then you really are able to build a consistent community that will be loyal to the product and to the service which is offered. So this is a highly interesting mechanism, but which is not perfect yet. So DeFi project can collapse from the same breakdown of incentives that broke the ICO model, when basically too many projects appeared with the intent to defect and market them their tokens on individuals. On the last few weeks, we have seen in the DeFi space many projects that at the end were only scam and that were trying just to attract naive investors and to get their fund without any real promise behind. So seeing this, maybe it means that we have reached a certain point in the development of the DeFi space where now there is almost as much as bad and malicious initiatives than good ones. But the yield farming mechanism might still be slightly more resistant to this outcome that basically made the ICO model not work anymore. So it's offer stronger for the foundation, even if it's by no means a perfect solution. And if you are interested to invest in this space, if you are interested to develop a product and services in the DeFi space, always take care of the fundamentals behind a given product, behind a given community. So you need to analyze the strengths, the face, the robustness of a given community, and also the same type of factors for the product and the service itself. And maybe just to finish, let's highlight a few remaining challenges around the DeFi space. So as we said, it's an industry which is emerging, so there is a lot of opportunity, but also a lot of risks. First risk is the risk of user error. So basically, DeFi application transfer all the responsibility from the intermediaries to the user. And sometimes this can be a negative aspect for many. So you have to design products that minimize the risk of user error. And it's particularly challenging when you deal with products that are deployed on top of immutable blockchain. So it's happened all the time. Sometimes users are sending their fund to a bad address and then they can't recover the fund, which would never happen on the traditional financial system. So we need, as builder in the space, to find a way to minimize the risk of user error and to improve the user experience. So the bad user experience is also a critical aspect of the space for now. If you want to use DeFi application, it's really requires an extra effort on the user part. And if we want this application to become a core element of the global financial system, we must provide tangible benefits that will incentivize users to switch over from the traditional system. So for now, it's still really early, and we are not able to generate mass adoption with the current level of user experience within this space. And the last challenge, which might be one of the most important, it's that DeFi, it's a cluttered ecosystem. It's an overcrowded space where there is every day, every week, a lot of projects that are appearing. And sometimes it can be a daunting task to find the application which will be the most suitable for a specific use case. So user must have the ability to find the best choice. And for now, it's really difficult to understand all the specificities around different products and services. And the challenge is not only to build a new application, but to think about how it will fit with the broader DeFi ecosystem. So as we said before, there is a composability aspect on the DeFi space, which make it very strong. So all new projects are always leveraging the value added by other existing products and services, and all successful initiatives manage to create great synergy with all existing products and services. So it means as a builder, as an entrepreneur in this space, that you need to understand basically all key application, all key projects in some specific application segments, and to find the best positioning just to create as much synergy as possible, and then providing a lot of value to your own customer. So that's all for today around DeFi and yield farming. I hope you enjoy the talk and the presentation. Do not hesitate to come back to us at Nictal if you are looking for more understanding of the DeFi space, and maybe if you would like to have access to unique performance indicators about key projects in the space. And in any case, I hope to talk to you soon.